What's going on with the cryptocurrency market right now? Just days ago, we were riding high on bullish news, plans for a US cryptocurrency reserve, major banks embracing crypto tech, and billion-dollar ETFs set to pour into the market. Yet here we are, watching prices tumble non-stop. What gives? In this video, I'll break down what's really happening behind the scenes and share how much longer I think this sell-off might last. Here's the thing. Tired of fake gurus who claim to be expert traders but never trade live? I trade live on the second largest crypto exchange, where everything is transparent and results can't be faked. For over 440 days, I've consistently closed every month in profit. In the last 90 days alone, my followers have earned over $34,000 in profits with only 4% drawdown. Verified results, not empty claims. Want to see my verified stats? Click the first link in my profile and start copying my trades for free today. Most people are overlooking a crucial detail that holds the key to understanding this downturn. Trust me, you don't want to miss this. Stick around and let's dive into the bigger picture together. Hey everyone, I want to kick off this video by diving into something I find super exciting. Before we get into the latest price action, I think this is one of those game-changing developments that adds to all the positive momentum we're expecting later this year. It's the kind of thing that helps you cut through the noise of the current market volatility. So let's get into it. This just dropped, and I had to share it with you. It's a letter from Larry Fink, CEO of BlackRock, and his take on the future of the cryptocurrency space. Now, he doesn't name specific blockchains, but as I break this down, I think it'll be hard not to see how XRP fits into the picture. Earlier today, Panos tweeted about this letter, calling it one of the most bullish pieces you'll read about crypto, and especially XRP. Here's the standout quote: "Transactions that currently take days would clear in seconds, and billions of dollars stuck in settlement delays could be reinvested immediately, driving economic growth." Sound familiar? It reads like something straight out of Ripple's playbook, almost too similar to ignore. And honestly, who knows? Maybe Ripple had a hand in influencing this vision. The current head of digital assets at BlackRock is a former Ripple executive, which makes you wonder, could Ripple be on BlackRock's radar right now? It's not a stretch to imagine. After all, their digital asset platform is literally led by someone who knows the ins and outs of Ripple. Take a moment to think about this. BlackRock, the world's largest asset manager, is openly stating that cryptocurrencies are set to transform the global economy. They're talking about an entirely new layer of economic growth, something we've never seen before. Cryptos won't just tweak the system, they'll overhaul it, making the plumbing of the economy faster, cheaper, and far more efficient. This kind of innovation has the potential to drive global growth in ways that were once unimaginable. This is the scale we're dealing with. For years, it was just enthusiasts like us saying cryptocurrencies could revolutionize everything. But now, the conversation has shifted. It's no longer about what's possible, it's about what's happening. BlackRock isn't talking potential anymore. They're talking reality, and it's game-changing. We're at a turning point where the biggest financial institutions, the ones still relying on outdated systems, are saying, we need new infrastructure, and fast. Why? Because they know these new systems are game-changers. Keep this in mind as we dive deeper, especially as we touch on some upcoming challenges that might spike volatility. Don't panic, it's all part of the process. Think back to 2008. The market crashed, and even revolutionary companies like Apple were hit hard, dropping 40 to 50%. It was brutal, but within months, they bounced back, hitting new all-time highs. Why? Because Apple was delivering industry-shifting products. Their vision wasn't derailed by the banking crisis. Sure, traders sold, liquidity fears rattled investors, but the technology itself was unstoppable. It transformed the world, and those who stuck with it reaped exponential gains over the next decade. I believe we're looking at a similar story with cryptocurrency. This time, you don't just have to take the word of enthusiasts like me. The writing is on the wall, change is happening, and it's poised to shake up everything we know. Take a moment to hear what BlackRock is saying. They're the gatekeepers of capital, the ones pulling the financial strings, and they're making it crystal clear. This is the direction we're heading. This isn't some wild conspiracy or far-fetched idea anymore. It's the future. They're openly saying this is what's needed to elevate their business to the next level. And here's the kicker. They're talking about the very public blockchains you and I own. So with that in mind, why are these assets being sold off right now? Especially when we know institutional adoption of this scale is inevitable. Here's the thing. As enthusiasts, we see the bigger picture. We understand the complex, game-changing utility behind these assets. But most investors, they're not quite there yet. They haven't fully grasped what Larry Fink is laying out. They don't dive deep into the details. They aren't reading between the lines. They're waiting for the mainstream media to spoon-feed it to them. People need to see BlackRock stepping up and saying, hey, we're using the XRP ledger to settle transactions in seconds instead of days or weeks. That's the kind of game-changing action they're waiting for. Right now, the market isn't at a place where people can connect the dots and realize just how revolutionary cryptocurrencies will be in shaping the future we've all been envisioning. Instead, crypto is still moving in lockstep with the broader macroeconomic trends. And that brings us to what truly drives current crypto prices, the macro market. Let's dive into that. Take the QQQ, for example, arguably the world's most critical tech index. Why does it matter for crypto? Because the big players, the fund managers allocating capital without fully understanding blockchain, are treating cryptocurrencies like they're just another tech stock. When growth stocks sell off, when tech stocks take a hit, they assume crypto has to follow suit. So, when the Nasdaq, S&P 500, or Dow show significant declines, every asset class feels the pressure, and crypto is no exception. The ripple effect is inevitable. As these major indices take a tumble, cryptocurrencies get caught in the storm, taking a hit right alongside them. That's what's driving the market now. Why is the market taking a hit right now? What's fueling this sell-off? These are the big questions everyone's asking. How long will this last? Is there something fundamentally wrong with the economy? Are we teetering on the edge of collapse or bracing for another black swan event? Let's cut through the noise. There are really only two key factors driving the market right now, and they're the ones you should focus on. First up, the tariff drama. It's dominating headlines and rattling investors. Many are panicking, wondering if these tariffs could trigger a new economic depression. But let's take a step back. Leading up to Trump's election, his stance on tariffs was seen as bullish, a way to shake things up. Now that they're being implemented, everyone's losing their cool. It'll go one of two ways. Tariffs will either be a game changer or a flop. Here's my take. They could be a huge win for the US. By incentivizing local manufacturing and boosting domestic competitiveness, tariffs might just reshape the playing field. And let's be honest, most of the items being tariffed aren't exactly essential. People are especially worked up over the Canadian tariffs. But is it really that big of a deal? Time will tell if this storm clears the way for growth or ends in chaos. I completely understand the concerns for those affected in Canada, but from a US perspective, we honestly don't rely on Canada for a significant chunk of critical goods. Because of that, we're still going to get what we need. It might just come a bit cheaper to offset the tariffs. And even if prices do creep up, it's not the end of the world. Sure, it's inconvenient in the short term, but in the bigger picture, tariffs are more of a bargaining chip than a long-term burden. Honestly, I don't see these tariffs sticking around for long. Right now, though, the market is acting like the sky is falling. People are panicking, shouting recession or even depression. But let's take a step back and look at some history. Remember Trump's first round of tariffs? When he announced them during his first term, the market plunged. Headlines screamed doom and gloom. Tariffs will destroy the economy. Sound familiar? But guess what happened? The tariffs came into play, people freaked out for a minute, and then realized they weren't the economic apocalypse everyone expected. The market bounced back. That same media fear cycle is playing out again. But if history is any guide, we'll see the same outcome. This isn't the end of the economy. It's just another bump in the road. Right now, it feels like we're stuck in the same cycle of fear-driven market noise. Eventually, though, the market will step back and realize the tariffs have been in place for months, and guess what? Things aren't falling apart. I believe the market will come to the conclusion that all this panic was nothing more than fear-mongering, with very little substance behind it. But here's where it gets interesting. There's another factor at play, one that's a bit concerning, yet could fuel a massive economic boom: inflation. For the past few years, the US has been holding back its own growth. Sounds strange, right? Why would the US stifle growth on purpose? The answer lies in battling inflation. Now here's the twist. Inflation has dropped. According to Truflation, we're sitting at 1.76%, below the Federal Reserve's target. This marks a turning point. For the first time in years, the US has a real opportunity to stop holding back and unleash its full economic potential. The United States was once its own worst enemy when it came to growth. Why? Because things were booming. Almost too much. The economy was skyrocketing. Everyone had jobs, money was flowing, and businesses were cranking out goods faster than ever. But with all that rapid growth came a problem. Prices started spiraling out of control. People could afford more, so prices kept climbing, creating an unsustainable cycle. The government stepped in, hit the brakes, and said, "Hold up, we need to cool this down before inflation gets completely out of hand." And it worked. Inflation, which peaked at a staggering 11%, is now back within the Federal Reserve's target. So what does this mean? It signals we're nearing a major turning point. The Federal Reserve is getting closer to saying, all right, we've seen enough. It's time to take our foot off the brakes and let the economy run free again. The real question is when. Timing is everything. When will the Fed decide the economy has endured enough pain? When will they start cutting rates and let growth take off again? That moment is closer than ever, and when it happens, we'll be back in a hyper-growth phase where everything starts soaring once more. Now, through all this economic drama, XRP has been remarkably steady. Despite the chaos, it hasn't flinched much. It briefly hit 50 cents before surging past $3.20, and now it's been holding firm in the $2 range. Even with all the fear and market turbulence, XRP has stayed strong, proving its resilience in the face of uncertainty. The stage is set, and the next chapter of growth is just around the corner. XRP has been showing incredible resilience despite the recent market chaos, barely dipping below the $2 mark. That's impressive. It's like the market is holding its breath, and the moment we get a signal that it's go time, XRP could be one of the first to explode upward. While the entire crypto market has been taking a beating, XRP has stood its ground. Why? Because investors are offloading everything else before touching XRP. Think back to 2008. The whole market was in shambles, but Apple defied the odds, holding strong and bouncing back faster than most. Sure, it had its dips, but it ultimately bucked the trend. We're likely to see the same scenario with cryptocurrencies like XRP. The institutional adoption and colossal amounts of capital flowing into crypto simply can't be stopped by short-term fear or market panic. The influx of money is massive, and those who truly understand what they're holding and can envision the transformation on the horizon are the ones who'll win big. It's like getting in early during the dot-com boom, but this time it's about more than just information. This is about value, a seismic shift that's going to reshape the global economy in ways we've never seen before. Thanks for tuning in. Hope you found this update insightful. Stay sharp, because the best is yet to come.